Welcome back. You're watching us here on Bazaar Morning Call on CNBC TV 18. In case you've just tuned in, the overnight cues from Wall Street slightly soft, but the Gift Nifty is indicating a 15-point uptick after a big gash that we saw in yesterday's trading session, particularly in the mid and small cap end of things. We welcome Deven Choksi from DR Choksi FinServe. Deven, good morning. There was a big cut yesterday, but moments before we came to you, we were having this conversation with the management of Belrise. The IPO season seems to be picking up. There are a couple of press conferences for IPOs lined up in the next few days as well, including that of Hotel Leela. Amidst all that is happening right now, have you had a chance to look at this offering, and what's your sense on Belrise and the auto ancillary space in general?
Yes, good morning, Mangalam. Well, I believe that I think Belrise appears to be a promising company. Given the kind of product range that they are catering to, both for ICE engine as well as for the EV, in respective categories, be it two-wheelers, be it four-wheelers. I think they have got probably a good amount of lever as far as the ability to maneuver the product range from one end to another end is concerned. That's what we gather from the subject understanding of the company. More importantly, this particular money which they are raising is getting utilized for the purpose of debt repayment, which means that if you take balance sheet fast forward, I think for next full year, probably, I think the amount of saving that they would have in the business because of the cost of interest, etc., will significantly enhance their profits going forward in the next financial year. So that is a promise which I believe that I think is likely to pay well in the marketplace. As such, we remain positive about the prospects of the auto ancillary companies, largely because of the fact that the India adoption of most of the global vehicles is happening at a faster pace, and including in space, I think this is happening now. So to a greater extent, the ancillary companies are likely to see the major benefit going into the books. So selective companies in the portfolio, I think we remain bullish about their prospects. Of course, the valuation at current level appears to be slightly expensive for this company. But as I said, that I think if they end up saving money on the interest cost and end up, I think, adding to the bottom line, which they could, in such situation, I think the valuation would get rationalized, a little bit expensive at the current levels.
Okay. Deveen, hi, welcome to the show. Morning. Wanted your thoughts on IndusInd Bank. It's coming out with numbers today. What are you expecting in terms of commentary, which I think would be the most important to watch for?
Yeah, good morning. Well, I think the most important part would be that they are going to be announcing probably as to what kind of efforts it would take for them to clean up the balance sheet. Already the major numbers are known of close to around 2,700 crores, which they probably had taken a significant amount of the damage into the balance sheet. In my viewpoint, I think how the corrective actions would take place, there probably the eyes would be what kind of management changes and what kind of team building that will be happening. I think that's where I think people will be keeping an eyes on. But as I see it, I think for next 1.5 to 2 years, I think major efforts will go in repairing the balance sheet as I see it at this point of time. So frankly, from investment perspective, would like to seek more clarity before taking any view on this.
Do you have a chance to look at the results that came in from Dixon as well as United Spirits overnight? United Spirits actually beat street expectations. Dixon, while it did beat street expectations, there are signs of a slowdown in a couple of their segments with some uncertainty around manufacturing going forward as well. Your thoughts on both of them?
So Dixon, the numbers are on the profitability front, that is the margin front, I think they appear to be relatively more stable than in the previous quarters. So that's a good sign. But whether it's something which is an opportunity, I'm not too sure. Everything is in price. They're getting this kind of fancy valuations. Even though they have a high amount of growth and growth programs undertaken, I don't think that I think easy to accept that in this kind of valuation. So maybe we'll have to wait for corrections of any degree, maybe price correction or all the time corrections to get into such kind of businesses when they're expensive.
And United Spirits?
Not too sure about that number, so haven't looked into it.
Okay. Oh, what about Hindalco? Did you have a look at Hindalco and what it reported in terms of its India business? It did well. Net debt is looking better.
So overall numbers, I think they are definitely appealing. They are better than what all expectations were. And certainly, I think the forward outlook, I think, from the company is appearing more promising than before. As such, I think we believe that it is time for some of the metal commodity companies, the ferrous and non-ferrous. I would think that next 6 months to 1 year, we are likely to see on one side the higher amount of global outlook emerging for metal commodities, and on the other side, for companies in India particularly, where they are having the advantage of lower input cost, lower manufacturing cost because of the energy cost prices are under control and they are mixing the renewable energy. So in my viewpoint, the profitability on one side and the market conditions improving on the other side, they are very well for many of the metal commodity companies. And that's where probably I think one could see the direction on the positive side. Once again, maybe some small corrections here and there, but I think the opportunity appears to be opening up for a big upside going forward.
Did you look at NHPC's numbers? I mean, some of their key projects have been commissioned in April as well. So post the Q4 numbers as well, the outlook seems fairly strong. The EBITDA was lower because of a couple of one-offs. So if there is a decline in today's trading session, would you look at increasing exposure to NHPC?
Not too sure, Mangalam. Haven't thought in that direction whether I would be considering this particular company from investment point of view. Maybe certain amount of reservations on this kind of businesses. That's where probably I think we are not completely applied our mind on taking them into investment portfolios.
And what about Eternal? Because that stock ended at the low point of trade yesterday, was 4% lower. It's that liquidity event which is likely to happen here, which is possible exclusion from the MSCI index, and that would lead to about $1 billion worth outflow because of the passive outflows. Because the company is recognized itself as a domestic-owned company, shareholders have given that note as well. Would you look at this dip as a buying opportunity, or do you think concerns around quick commerce will continue to plague the balance sheet of the company?
Yeah, we have reservations on the business model per se, and I think we feel that in the quick commerce game, probably the Reliance JioMart is basically putting in significant amount of efforts to probably meet the competition and beat the competition. So maybe I think one would not like to immediately buy into the companies which are relatively expensively quoted at this point of time. Yes, I think they have been trying to overcome this situation by way of adding different revenue streams into the portfolio. But in my viewpoint, I think they're still expensively quoted. So we'll stay away from it because the larger players are going to put significantly big amount of money behind the business. And that's where I think this kind of companies may remain a little vulnerable. I think unless they raise more money, they would remain a little more vulnerable.
Well, Devin, more of a short-term question, and I don't know if you're probably getting some client queries on it, but given this little bit of caution which is emerging with regards to COVID-19 cases, are you seeing a lot of queries probably come in for hospitals as well as diagnostic stocks?
Not yet. I don't think that. I think that is coming on the surface immediately, but maybe I think one will have to keep an eye on.
Okay. In general, how would you approach, say, a Fortis and an Aster that came out with its numbers on the hospital space? Any of these stocks that you've looked at?
Yes, we keep on having a good look at these companies, but we feel that most of the things are in the price. They are not the attractive proposition at all. Every company is talking about growth, adding number of beds, new facilities, etc. But the fact remains that I think they are leveraging on the market cap value that they are having, and they are probably, I think, rightfully doing so. But at the same time, for investors, I think they remain expensive proposition. So unless we see some meaningful price correction, for at least I think seeing the headroom up to 20-25%, one would not like to buy into at current price. Maybe wait for some more time actually.
All right, Devin, thank you so much for joining in and giving us your views on a whole host of stocks and sectors. With that, we'll